I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Friday morning. New York City Emergency Management Department ringing the bell at the New York Stock Exchange. FinWise Bancorp getting things popping over there at the NASDAQ. The week has seen the market meander a little as it searches for its next big catalyst to the upside or downside. One possible catalyst, an interest rate cut from the Federal Reserve later this month, has been removed from the equation following sticky inflation reads in the CPI and PPI this week. Meanwhile, strong earnings reports this week from Netflix and United Airlines haven't done enough to excite investors to push valuations to even richer levels. Now, of course, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. I know what's in that portfolio. I've been tracking it all year long. So we're watching here, the market's getting ready for action here on this Friday morning. Let's head down to the NASDAQ in Times Square. We're getting ready to check in with our senior reporter, Allie Canal. Allie, woke up this morning and I'm seeing no Colbert show. That is ending next year. And my first thought, wow, the cuts just continue at Paramount.
Yeah, in Paramount, they are trying to close that Skydance acquisition. Now, there have been rumblings about whether or not this was connected to President Trump's lawsuit against Paramount. Ultimately, Paramount decided to settle that lawsuit for $16 million. That was over the editing of that 60 Minutes interview with Kamala Harris heading into the election. Paramount shares are not doing too much this morning. They're pretty much trading flat, but Stephen Colbert did speak out against this settlement, calling it a, quote, bribe. And we know that the Trump administration is needed to complete the Skydance acquisition. Now, Paramount said that the Colbert Show cancellation comes amid those cost-cutting efforts as they work to clean up that balance sheet there. But again, shares not reacting too much here. Another media name I have my eye on is Netflix. And Netflix, unfortunately, not doing too hot at the opening bell. We are down over 4%. And this comes after they beat earnings on both the top and bottom lines. They raised their full year forecast, but it wasn't enough to satiate investors that really had placed a high bar on this company heading into earnings season. The stock currently trades around 40 times forward earnings. This is about double the S&P 500. Shares are up over 40% since the start of the year, and perhaps they wanted that full year raise to be a little more substantial. A lot of that had to do with foreign exchange tailwinds, so maybe that wasn't enough. But overall, a solid quarter for Netflix. I was pretty surprised to see this reaction in shares, but again, that high valuation not doing too much. And then in terms of the broader markets here, we are flat to the upside for the benchmark S&P 500, up around 0.3%. Dow essentially flat. Nasdaq up around 0.4%, and this comes after both the S&P 500 and the Nasdaq hit another record high at the close yesterday. We'll see if we can get it done this week, Brian, to finish out with gains across the board here. But what a week! I feel like we had a lot of news this week, and it's only going to keep ramping up as earnings season chugs along.
Right on, Allie. And of course, the Bulls not tuning into shares of Netflix. I mean, it's a little bit Stephen Colbert-like humor there. I don't know if it landed flat, but it is what it is. All right, we're firing this up today with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, the fight for Fed independence. Fed Chair Jerome Powell defended a $2.5 billion renovation to the institution's HQ in a letter to the White House budget director. This is the remodeling job has angered President Trump and even given him a new piece of arsenal in his attacks against Powell and the Fed. The very public rebuke of the Fed by Trump is triggering growing concerns on Wall Street about the near-term outlook for markets. The Barclays team said today some additional risk premium is likely to remain in the bond markets as a result of Trump's verbal barrage. Number two, Netflix streams a strong quarter and outlook. The streaming giant did everything in its power on its late Thursday earnings day to justify the stock's sizzling 43% year-to-date run. Sales rose double digits, margins expanded, the outlook was raised, and hey, Happy Gilmore 2 is dropping on July 25th. I cannot wait for that one. Number three, the year of the crypto craze rages on. The House voted overwhelmingly on Thursday to pass the Genius Act, the first ever major legislative overhaul of crypto regulations. The bill now heads to President Trump's desk. The act establishes guidelines for banks and other entities that issue stablecoins and safeguards for stablecoin holders. Shares of crypto plays Webull, Coinbase, Circle, and Robinhood have all caught bids higher today. Joining the Open Bid Roundtable for today, Chad Morganlander, Washington Crossing Advisors Senior Portfolio Manager, and Yahoo Finance Senior Reporters Ines, Ferré, and Allie Canal. Chad, good to see you as always here. I want to start on this on all things Fed. Interesting note by the Barclays team caught my attention this morning, like I just mentioned, suggesting that if Powell were to get fired by President Trump, you could see more risk premium built into bond markets, or another way of looking at yields would go higher. Do you share their concern?
Well, I do, but the probability of that happening is really quite low, maybe perhaps zero. They're going to continue to bang the drum and complain about Powell, but overall, they're going to let his term expire, and then they're going to hire another conventional central banker to lead the Fed. With that said, Powell's probably going to, at Jackson Hole this August, announce or signal that he's willing to lower rates. How much? That's a big question mark, but he will perhaps signal that in August.
Chad, when you talk to clients, are they making decisions in their portfolio based on this back and forth between the Fed and Trump?
No, there's zero decisions being made on that. This is all just headlines. I think it's just, it's a summer, it's quiet, and, the current administration does have their issues with Jerome Powell, but by no measure do they want to go off the railroad tracks here when it comes to the Federal Reserve.
Ines, it's been good theater to watch, though, right?
Oh, for sure. I mean, look, the Fed right now is in a catch-22 situation, because even if Jerome Powell wanted to lower rates right now, that would look like he's appeasing to President Trump. And then if they do lower rates in September, then we have to see if they will or not, because now the market is kind of iffy on that. But if he doesn't lower the rates in September, then you're going to think that that's because of political issues as well. So they're really in a catch-22 situation. The question is, why would they lower rates now if you have unemployment at 4.1%, if you have the markets at all-time highs? But what the note that you were alluding to earlier, Brian, really is saying that, yes, this would be counterproductive if he were to be replaced. You would see the rates on the long end going higher. So the yields on the long end going higher. So it's all a catch-22 right now. It's gotten politically messy. But as Chad was saying, the market may be right now saying this isn't going to happen.
Allie, the last thing we need here is more concern about the health of the bond market. Feels like we just got past that. Now that even in the face of the one big bill adding more debt onto this U.S. economy, the bond market has quieted down. But this week, things started to pick back up a little bit. Heard some more concern, not crisis level, but people are getting worried out there again.
Yeah, it just shows how jittery the bond market is, especially when it comes to these Fed developments. And we've been talking about all week that if we were to see Trump go ahead and fire Powell or remove a Fed chair, that is going to have an immediate impact on stocks, equities, and, like we've been discussing, the bond market. And we know when the 10-year Treasury yield gets to a level of around 4.6%, that starts to weigh on U.S. equities. And we're in a market that's pretty sensitive right now. Stocks are at record highs. We do seem to have market breadth, but on a company-specific level, it's still very concentrated in those tech names. So any pressure is going to be felt by investors. So on the Fed front, it seems like there's just a lot of unknowns and uncertainties on when we could see that Fed rate cut. We were just talking about Fed Governor Waller, and he's been really prioritizing the jobs and labor market side of the Fed's dual mandate. Others are focusing on the inflation side of the equation, and you can even look at the Fed dot plot to see how dispersed all the different opinions are there. And that's leading to various opinions on Wall Street. Like Ines was just alluding to, markets now only pricing in a 50-50 chance of a September rate cut. It's quite possible we might not see any rate cuts this year. So markets just chugging along, trying to pick up all the breadcrumbs that they can. And we do have stocks currently at record highs, but very sensitive that any big move on removing a Fed chair or Fed independence, that's going to jitter investors for sure.
Allie, Chris Waller's all but put like a sign around his neck. It's like, hire me, I want to be the Fed chair. Please, please, Mr. Trump, hire me. I mean, what is this guy doing? Chad, the candidates that we've heard rumored to be vying for this candidacy, of course, clearly Chris Waller still has that sign around his chest. Is anyone exciting you in particular that if they get this job, you're going to back up the truck and go out and buy more stocks?
Well, the reality is that all of these candidates will be moderately dovish initially in their term. And they're all conventional central bankers. So they all get a B+ rating from my perspective overall. I will tell you, though, that the financial conditions currently are really lenient and really loose. So the Federal Reserve isn't pressured to drop rates in a great radical fashion. So our expectation is that maybe perhaps they tap the brakes once with a quarter of a point rate reduction.
Another name or story we're following today is Netflix. Allie, stocks selling off on this news. But look, you go into the fundamentals of Netflix. They hit everything that I want to see as a former stock analyst. Margins up, revenue growth accelerated quarter over quarter, outlook raised. They got a giant content slate coming out in the second half of the year. Not only live experiences, with the doubleheader on Christmas Day. You have Happy Gilmore 2 dropping. That's exciting. I don't know what else Netflix could have did yesterday.
Yeah, and if you look through all the analyst news, which is what I've been doing all morning, everyone is still pretty bullish, but they did say that it's really hard as a company to surpass elevated expectations. Earlier, I was talking about the valuation, 40 times forward earnings. The stock is up over 40% since the start of the year. So perhaps they wanted that full year guidance to come in a little more ahead of where we're at, considering where the stock is trading right now and all those catalysts still to come, like you were just mentioning, Brian. But by and large, this is a company that has a solid balance sheet. It even has some AI touch points. They are going to be using generative AI in their shows. And as we know, any company that has those AI adjacent business propositions, that's going to be rewarded by investors. So there just seems to be a lot of growth drivers here. Advertising in particular has been one that stuck out. It's one of the cheapest ad plans on the market. They're continuing to see solid growth there, and they are expected to double their revenue by the end of this year to around $3 billion. And a lot of analysts and sources who I speak with say that now subscriber numbers are no longer available to focus on those ad numbers, because that's an area where we're going to consistently see a lot of top line growth. So that's really strong. We have the content side of the equation that's really strong, a really solid back half of the year. And like you said, nothing really disappointed me in this report either. But when you're dealing with investors that just have a high bar, sometimes that struggles on the stock price side of things.
So I'm going to sum up what Allie just said, Chad. Netflix is a fundamental beast. Now, having said that, this reaction that we're seeing in the market to these very strong earnings and outlook, any read through there to large cap tech earnings that are going to come over the next 2 weeks. Microsoft, by all indications, are probably going to come out here. Good quarter, beat, relatively upbeat earnings call. Is the risk here we get a sell off there too?
Well, I mean, all of these tech names on the Mag 7 side have been moving higher in anticipation of really white hot earnings, top line revenue growth, and whatnot. So yes, you can get a breather where there is some consolidation within the market overall. But again, there's a lot of tailwind here when it comes to the AI related companies, revenue growth. This is real revenue growth, real earnings coming through. So over the long run, if that you have that, then you should see higher highs within these names.
Speaking of real, Ines, over to you. Crypto, it's more just than having a moment. This is, this story, it really has been the year of crypto, now especially off of the Genius Act. Saw a report by the FT this morning that President Trump may allow, 401ks to dabble in crypto. And we're seeing strength across the board here.
Yeah, and that would be significant. We are. And the entire crypto asset market right now, cryptocurrencies, have now reached $4 trillion for the first time ever. This includes Bitcoin, which is the big one, Ethereum, Solana, all the altcoins. So you are seeing massive investor appetite when it comes to crypto across the board. This, of course, comes on the heels of the Genius Act, which is heading to the president's desk. This creates guardrails for the stablecoin industry. That is an industry which the street is expecting to grow to maybe 1.6 trillion by 2030. It's more than 250 billion right now. So in a bullish scenario, it could be even 3 trillion, depending on which analyst that you talk to. You have seen not only Bitcoin going to all-time highs this week, but you've also seen a run-up in Ethereum, because Ethereum will be a beneficiary of the entire stablecoin boom as well. So across the board, you are seeing adoption, institutional adoption, and the Genius Act, what it also does is it underpins the entire industry as a whole, and it only accelerates crypto assets, when it comes to finance, when it comes to payments, and the fact that you have the president pushing for this as well is a tailwind for the entire industry.
All right, straight ahead, OpenAI gets some Wall Street coverage despite not being a public company yet. And the CEO of American Express tells me the consumer is staying resilient. We'll be right back with all these details. Welcome back to Opening Bid. Now, it's not common practice for a company to land Wall Street research coverage when it's still a private company. But when you are talking about OpenAI, at this point, conventional wisdom needs to be tossed in the trash. JP Morgan's Brenda DeVers initiating coverage on OpenAI today. DeVers says OpenAI stands to shake up the search market further in the years ahead. She says OpenAI has an unrivaled brand and a $700 billion total addressable market potential, or as the kids like to say, TAM. DeVers says has no rating or price target on OpenAI since the company isn't public yet. OpenAI is the second highest valued private company on the planet, according to Yahoo Finance private markets data. The company has an estimated valuation of $325 billion, second to only Elon Musk's SpaceX at $443 billion. All right, it's time now for our question of the day, and let's stay on the tech theme. Are we witnessing another tech stock bubble? I put this to Apollo chief economist Torsten Slok. Here's what he said.
I do think that we'll have a lot of growth, but it looks somewhat extreme to me that the valuations for those significant big stocks in the S&P 500, which make up such a big share of the overall S&P 500, is at these very high levels relative to where we were in the IT bubble, where the valuations of the 10 biggest companies in the S&P was a lot lower. So I do think that there is a bubble from a PE ratio perspective, because these companies have just become so expensive and it's become so concentrated for investors that it's really no longer a diversified investment to buy the S&P 500.
All right, still with me is my roundtable, Chad Morganlander of Washington Crossing Advisors, and Yahoo Finance senior reporters Allie, Canal, and Ines Ferré. Chad, over to you on this one. You never know if you're in a bubble until after the fact, right?
Yeah, correct. And in fact, your clip there was correct. You are sitting at a 23 multiple, so you are in the earlier stages of a bubble. Living through the 90s, one must recall that the S&P earnings or PE multiple got over 30 times in 1999. So there will be, when you look back at this time, there will be a lot of malinvestment made, some silly investment ideas that didn't work out. But over the long run, over the next 10 to 15 years, this excitement about artificial intelligence is justified. It's just a matter of the valuation gap and where that valuation gap meets the reality of earnings.
Well, it sounds like, Chad, if you want to compare it to the internet craze, we still have more to go in terms of valuations, at least from a PE perspective.
Well, that could be true. Again, buyer beware on the type of companies that you're buying. At Washington Crossing Advisors, we own Alphabet, for example. That's trading at roughly about a 17 times multiple when you take away cash. For full disclosure, not only do we own it in our portfolio, but I personally own it. But that company has a full competitive stack to go against OpenAI.
Ines, I haven't covered a good bubble in a while. The last one I covered was cannabis a couple of years ago. Every day, cannabis stocks would go up until, well, they did it. And maybe it's time we do get a bubble bursting, and maybe it does start with AI.
And we could, for sure. This is probably different than cannabis because it is touching all sorts of industries. I mean, if you take a look right now at the different sectors of the S&P 500, you are seeing industrials, which is leading the way. Think big construction, factories, AI centers. You are seeing tech. You are seeing utilities, which is usually the sleepy part of the market. Utilities is up, outperforming the broader market. And then, of course, you're seeing financials as well. So you can tell that it is touching all parts of the market right now. And if you think in the future, like what Chad was saying earlier, look, long term, this will be a huge productivity boom for the entire economy. Because just imagine having endless amounts of workers at your disposal, endless amount of AI bots that are doing work for you. And this is not just about AI bots, then you're talking about later on having robots doing everything. I mean, this is going to be a massive, massive productivity boom. But yes, we could be in a bubble right now. We would see it deflate, but then we would see exponential growth.
Right on, Ines. I need 1,000 personal digital assistants. Thank you. Thank you. And I'm going to get those someday because of AI. All right, let's turn now to our stock of the day, American Express. And yet another sign the U.S. consumer is taking Trump tariffs in stride. Amex smashed second quarter earnings estimates by 21 cents this morning. Sales and earnings, excluding one-time items, rose a healthy 9% and 17% respectively. The company said it saw record card member spending in the quarter. Amex made no change to its full year sales and profit outlooks despite the second quarter upside. American Express CEO Stephen Squeri told me by phone, quote, "I think people just want to live their lives," and that's what they're doing. I mean, you're seeing a little less air travel, obviously, but people are still spending and they are still traveling. Chad, yes, people are still living their lives. So what's the play off of that? Because I still think the American Express growth story has not been appreciated by the market. If you want to go elsewhere and you believe in the consumer, where else can you go?
Well, you can go towards Visa as well, although there's concern and a little bit of overhang concerns about stablecoin. We believe that Visa is another direct play on the consumer. We believe that over the long run, you could see growth rates of 8 to 12% on the top line for American Express and for Visa. The consumer has been very resilient. Our expectation is that when you get into 2026, after you get through this tariff concern, that you'll see a strong labor market, you'll see GDP growth led by productivity, as well as business investment that will elevate GDP growth and earnings per share for Visa and American Express.
Allie, the I'm living my best life trade, it includes Netflix. Because the reality is, I'm going to go home on Friday, I'm watching Netflix, I'm not going anywhere, and all that makes me very happy.
Oh yeah, I can't wait to do that later today, Brian. But throughout this whole week of earnings, it's been very interesting to look at two different camps of the consumers. We heard from American Express, a lot of these big banks, that the consumer is resilient, that they're doing fine. But there's this juxtaposition there. There's the high income earners, the stock market investors, and then there's those that are still struggling with inflation. And you can see that in some of these earnings reports. We saw Pepsi in the middle of its turnaround plan. They have seen and lowered guidance for consumers pulling back on some of that spending. If you look at on a sector basis, consumer discretionary is one of the worst performing sectors in the S&P 500. And even a company like Netflix performed very well, but their ads business is really the growth driver here, one of the cheapest plans on the market. So what does that tell you? That has been a theme that has been emerging and percolating in my brain. So we'll see what we continue to hear from these companies as earnings season levels out. But that's a focus of mine, the high income consumer versus the low income consumer, and at what point do the two need to start to merge before we start to see some cracks there in the economy?
Good point, Inez. I think you would dig this one. Squeri telling me that he is open to more stablecoin stuff. Now, they recently signed a deal, I believe, with Coinbase, but it's not just Amex having interest in a stablecoin. You have I think Visa is also in the space too, in some capacity.
Visa, you have Shopify. Also, you've got so many now companies that are in the stablecoin space, and it'll be interesting to see how this shapes out as far as payments are concerned. If there will be mass adoption across the payment space, cross-border remittances, that will be something that is very bullish for the industry as well. That analysts are looking at as far as the market's concerned with stablecoins. The fact that you have, though, this Genius Act that passed, this is significant overall, and this also gives short-term treasury bills a big buyer here, and these stablecoin issuers, which are buyers of these short-term treasury bills. This is why the street is so bullish on this as well, because they're saying the government will want to play nicely with the stablecoin industry. It's their buyer.
All right, super big thank you to my panel, Chad Morganlander, Ines Ferré, and Allie Canal. Coming up, Yahoo finds his Market Catalyst. We bring you the news behind the market moves for the trading day.